Hello there and welcome. We're going to be tackling a question that's on a lot of people's minds right now, causing a bit of buzz, maybe even a little bit of panic for online sellers all over the UK. And that question is, do I actually have to pay tax on my eBay sales? Well, to get you some clear, straightforward answers, this entire guide has been developed by the expert tax advisors at My Tax Accountant, one of the UK's most trusted accounting firms. They've put this together to help people just like you figure all of this out.
So let's just jump right in with a really direct question. Think back over the last year. Did you sell more than 30 items on a platform like eBay or maybe Vinted or Etsy? Or another way of looking at it, did you make more than about £1,700 from all those sales? If the answer is yes to either of those questions, then you are definitely going to want to stick around because things have changed. And you can feel really confident in the information we're about to go through. We're able to share all of this with you because, as I said, we've worked directly with the tax experts at My Tax Accountant. They put this guide together specifically to cut through all the noise and confusion surrounding these new rules. Okay, so here's a quick look at what we'll be covering. First up, we'll get into the new rules that have everyone talking. Then, and this is the big one, we'll figure out if you're selling as a hobby or a proper business. After that, we'll look at the key tax-free allowances, the magic numbers you need to know. We'll also cover how to claim your expenses if you're trading. We'll even walk through a real-world example with Alex's eBay story to make it all make sense. And we'll finish up with a simple action plan you can start using straight away.
Right, let's get straight into it then. Section 1, the new rules for sellers. We're going to clear up what's changed and, just as importantly, what hasn't. So this whole thing really kicked off back in January 2024. That's when new international rules came into play. Now, what that means is that right now, throughout this whole calendar year of 2025, platforms like eBay and Vinted are actively recording sales data. The really important date for your diary is January 31st, 2026. That is the deadline for these companies to send their first big batch of seller data directly to HMRC. So make no mistake, this is happening as we speak. And that brings us to the real heart of the matter. This is not a new tax. HMRC has been very, very clear on this. The tax rules themselves are the same as they've always been. What's changed is the visibility. HMRC will now automatically get your sales data straight from the platforms if you cross certain thresholds. In short, there's really no more flying under the radar.
So, what are these thresholds that trigger the automatic reporting? Well, there are two, and you only need to hit one of them. The first is if you make 30 or more sales in a year. The second is if you earn more than £1,700, that's about 2,000 euros, in gross revenue. And gross just means the total amount of money you get before any of the platform fees or postage costs come out. If you hit either of those numbers, your data is on its way to HMRC.
Now, this leads us to what is probably the single most important question you need to answer for yourself. Am I just enjoying a hobby, or am I actually trading as a business? Here's where most people get confused, and honestly, getting this right is absolutely crucial. Your answer changes everything.
Let's break down the difference, because it's pretty clear when you see it side by side. A casual seller, a hobbyist, is basically just having a clear out. You know, you're selling your own unwanted stuff, old clothes, books you finished, maybe a gift you never used. The key thing is, you're not really trying to make a profit. A trader, on the other hand, is running things more like a business. You're likely buying things specifically to sell them on for more money. You're active regularly, and you've got a system. That intention to make a profit, that's the real decider for HMRC. And look, this isn't just guesswork. HMRC has an official set of criteria they use called the badges of trade. They look at the whole picture of what you're doing. Things like, is there a profit motive? Are you buying things just to flip them? How many sales are you making? Are you fixing things up or modifying them to make them more sellable? No single one of these is a smoking gun, but if you're ticking several of these boxes, then it's a pretty safe bet that HMRC will see you as a business. Okay, so now that we're a bit clearer on the whole hobby versus business thing, let's talk about the magic numbers. These are your key tax-free allowances that every online seller should know about. This is the part that can actually save you money, so you'll definitely want to hear this. The first, and maybe the most important number for anyone who is trading to remember, is £1,000. This is your annual trading allowance. If your total income from trading, that's your sales revenue before any costs are taken off, is less than £1,000 in a tax year, usually don't even need to tell HMRC about it. So, what happens if you make more than £1,000? Let's make this simple, because this is where people can get a bit lost. The allowance can still be a massive help.
You basically get a choice. You can either add up all of your individual business expenses and deduct those, or you can just deduct the flat £1,000 allowance from your income. For lots of smaller sellers, just taking the £1,000 allowance is so much simpler than keeping track of every single little receipt.
Our second magic number is £6,000. Now, this one is different. It's not for traders. This is for when you're selling a single personal item as a hobbyist. It's called the chattel's exemption, and it's all about something called capital gains tax.
So what on earth is a chattel? Don't worry, it's just a fancy legal term for a personal possession. Think of things like a piece of jewelry, an antique painting, or a nice watch. And capital gains tax is just a tax you pay on the profit when something you own goes up in value. But the good news is, if you sell one of these personal items for less than £6,000, any profit you make is usually completely exempt from capital gains tax.
Okay, let's get back to those of you who are trading as a business. If your income is over £1,000 and your costs are too, then you will absolutely want to be claiming your expenses. Now, stay with me here. This next part affects nearly every small business. This is how you legally reduce the amount of tax you have to pay. Right, the golden rule from HMRC, the one thing you must always have in your head is that any cost you claim has to be wholly and exclusively for your business. What that means is you can't claim for something that's for both personal and business use unless you can very clearly separate out the business bit of the cost.
This area catches a lot of people out, so let's run through some common examples of what you can claim. The big one, of course, is the cost of the stock you sold. But don't forget all the other bits, like the fees eBay and PayPal take, all your postage and packaging, stationery, a fair proportion of your home running costs, like heat and light if you work from home, and yes, even the fee you pay your accountant to get all this right. And here is a fantastic tip from the team at My Tax Accountant. Honestly, this is a real game changer. Open a separate bank account just for your selling. It might seem like a bit of a faff at first, but believe me, when it comes to tracking everything and proving your numbers at the end of the year, you will be so glad you did. It makes life so much easier.
Right, we've gone through a lot of rules and numbers. So let's break this down with a real-world example to see how it all fits together. Let's talk about Alex. He started out collecting vintage watches, and it grew into a nice little side business on eBay. Let's run his numbers.
Okay, so in the 2025/26 tax year, Alex's total sales came to an impressive £45,000. Now, his costs for buying the watches, fixing them up, platform fees, postage, all of that totaled £31,000. So we take his revenue of $45,000 and we subtract his costs of $31,000. As you can see on the screen, that leaves Alex with a final taxable profit of £14,000. So the crucial point is, what does Alex actually owe on that £14,000 profit? Well, as this chart shows, it breaks down into two main parts. There's the income tax, which comes to £2,800, and then because he's self-employed, he also needs to pay national insurance contributions, which adds another $292.50. So you can see how important it is to know your final profit number. Okay, now that you've seen how it all works, what should you do next? Let's finish up with a really simple 4-step action plan to help you get on top of everything and make sure you're doing things by the book.
Step 1, go and review your sales totals for 2025. Did you cross either of those reporting thresholds we talked about? Step 2, be really honest with yourself. Use those badges of trade and decide, are you a hobbyist or are you a trader? Step 3, get your records in order. Start gathering all your sales reports, your receipts, proof of postage, everything. And finally, step 4, and this is probably the most important one. If you are unsure about any of this, please seek professional advice. It can save you so much time, stress, and money down the line.
The main thing to take away from all of this is that we're in a new era of transparency. The days of selling online being a bit of an unknown to the taxman are well and truly over. So the question I want to leave you with is a simple one. Now that you know the rules, what does your own tax situation look like? Now, just before we finish, I have to make it very clear that the information we've gone through today is for general guidance only. Everyone's tax situation is different, so you really should not rely on this as the only basis for making financial decisions. To get proper, professional advice that is tailored specifically to you, we really do recommend you get in touch with the experts who put this guide together. You can contact the team at My Tax Accountant directly. The phone number is 0208 570 8531, or you can drop them an email at info@mytaxaccountant.co.uk. And if you want to read through all of this in more detail, you can find the full article on their blog.
just head to mytaxaccountant.co.uk/post/tax on eBay sales. And for more helpful guides just like this, make sure you subscribe to the My Tax Accountant YouTube channel. Thank you so much for your time.